I never played by the rules, even when I was in like preschool. Like I was always just off doing my own thing. People are doing drugs on the streets and, it's very unsafe.
And like they're not criminals, they're crazy, right? They're
crazy.
insane. They just break your window, take your stuff, and they don't care about the law.
Yeah. Only have become VCs, change as a person. They become worse people. I almost think that my time with VCs was inverse to the success. The more time I spent with VCs, the less successful the business was. The less time I spent with VCs, the more successful the business was.
Começa mais um GigaCast, trouxe um convidado unicórnio para vocês hoje. Esse cara conseguiu fundar uma empresa que vale $1 bilhão com só 20 anos de idade. Ele já levantou mais de $130 milhões em investimento, já geriu mais de $15 bilhões em ativos financeiros e, cara, já salvou mais de 200 mil horas para os clientes deles e já salvou para os clientes e todo mundo mais de $200 bilhões em impostos nos Estados Unidos. E ele, cara, veio aqui pra gente contar, um grande amigo que eu tenho aqui de Nova York, e vocês vão ter a oportunidade de ouvir a belíssima história dele. Com vocês, meu querido Samir. Welcome, Samir.
Thank you so much for having me.
Of course, man. I just have to do quickly the sponsors of the episode, and then we can get right to the story, right?
Yeah.
Então, hoje com nossos patrocinadores, o primeiro patrocinador é a nossa mais nova AW Sales, que é para você conseguir automatizar as mensagens de WhatsApp do teu time de vendas, do teu time de atendimento. Eles têm tido muito sucesso no mercado de infoprodutos, no mercado digital e agora estão trazendo também para o mercado de startups e estão crescendo muito rápido. Se você quiser automatizar o teu trabalho, automatizar o teu time de vendas, a AW Sales eu recomendo demais. Segundo patrocinador é a nossa querida Gestor, a plataforma AI para você conseguir automatizar o teu negócio e dar produtos de inteligência artificial para os teus clientes. Você não precisa saber programar, só saber usar o GPT, por exemplo, e aprender a mexer ali na plataforma deles, que é super fácil e intuitivo, e você consegue automatizar para ninguém mais estar tendo que fazer aquele trabalho repetitivo e chato. O terceiro patrocinador é a Hyper, que é a plataforma de anúncios por geolocalização, onde você consegue, com muita facilidade, mostrar anúncios para pessoas que foram em um certo tipo de estabelecimento. O exemplo que eu sempre dou é que a Danone quer vender Rio-Pro e ela mostra anúncio para as pessoas que frequentam as academias. E tudo pela Hyper. Se você faz mais de $30 mil em anúncios por mês, você pode anunciar na Hyper. E nosso último é a nossa querida Avenia, nosso mais novo patrocinador, que criou a stablecoin BRLA e hoje já faz para mim, por exemplo, de trazer o meu dinheiro de investimento lá dos Estados Unidos para o Brasil muito rápido. Então aquela história de ficar 3 dias esperando para chegar o teu dinheiro, acabou essa história. Com preço altamente competitivo, você consegue fazer isso de maneira 100% regulado com a Avenia. So let's go to the episode. Okay, man, so let's start from the beginning. Where were you born? Michigan?
I was born in Cleveland.
Cleveland, okay.
Ohio. So my co-founder was born in Runick. He was born in Detroit, Michigan. So we're two Rust Belt kids.
Rust Belt kids, man. And how was that, man? Like growing up there, like who were you in school?
Who was I?
Yeah, like what kind of character were you?
I was always up to no good. I was like a very mischievous, very, out of the box thinker, so to speak. I was never like, I never played by the rules, even when I was in like preschool. Like I was always just off doing my own thing.
So like the teachers hated you pretty much.
Universally, the one thing that everyone could say about me is my teachers all collectively hated me. There was a few teachers that like spotted my like version of smart, and those teachers liked me, throughout. I can remember one in middle school and one in elementary school, but for the most part, I was not uniformly liked by my teachers.
And like, were you good in like, I don't know, math or physics or anything?
Yeah,
or
I was very, early on, I was very studious. I was very smart. I did we call it nerd camp, but it was basically a college summer program from 6th grade onwards. I was moved to like a school for gifted students. I was, exceptional in all of my different academic areas. But I really quickly learned going into middle school, like probably 7th, 8th grade, that like it was kind of a waste of time. I had no interest in college. I wanted to build a business. So school took a back seat. And the issue was never, the intelligence. The issue was always applying the intelligence. So I didn't do my homework. I barely showed up. I would just kind of like write whatever on tests because I was thinking on a completely different time scale, on a completely different set of things than the conventional sets of things that students would think about.
And what triggered that? Like, where do you get those ideas from? Are your parents entrepreneurs?
My parents are not. They're both doctors. So I was actually constantly fighting them because, early on, I remember this, when I was 5 years old, I was in kindergarten, and we had to get up in front of the whole class and say what we wanted to do, and all the parents were there. And I was really obsessed with Legos early on. So I would like spend all of my time building Legos. So, like I built these huge Lego cities and I just visualized what it would be like to have my own city. And I had to get up in class and I had to say, here's what I want to do. And I said, I want to be a construction worker, because I thought that construction workers were the real builders, and I wanted to be a builder. And I thought that the way I could express my imagination was through building and being a construction worker. And my parents like freaked out. They said, you should be a doctor, you're going to medical school, you're going to follow the same path we did, academia, blah, blah, blah. And it wasn't until after I saw, it's cliche, but I read the Steve Jobs book, I saw the launch of the iPhone and the iPod, and I got my first iPod and I was like, I want to build products. And then I started to learn about investing and finance.
How old are you at this point?
I was like 8 or 9 years old.
8 or 9, you like read the Steve Jobs book and you're like, okay, I don't want to be a construction builder. I want to be
a founder. I want to be a builder. I want to be an entrepreneur.
The next Steve Jobs.
Yeah.
I know, man. I've been reading his book right now, actually, and it's so inspiring in many ways. It's so crazy in other ways as well, right?
Yeah. Well, I mean, what inspired me more than the books was the product launches. Because every time there was an Apple product launch, I would be excited for days, for weeks. Like all my time would be dedicated to like watching review videos and preview videos, like what's going to happen in the product launch. And that excitement gave me this idea of like, oh, I could like build products that could be transformative and change the world in the same way.
And get people very excited. Have you done like a big launch with like as Steve Jobs would do so far, or not?
For financial advisors, yes.
Yeah, like
clients.
Yeah, a room full of financial advisors.
Yeah, a room full of financial advisors. And I feel like in some ways, like it's kind of analogous of like what we're disrupting the industry in the same way. The iPod disrupted how you entertain yourselves. The way we manage portfolios is going to be disrupted by the way Advise's algorithms kind of have an impact on how advisors run their businesses.
Okay, let's get to that in a point, and then we're gonna go very deep into business.
Yeah. So
at this point, you start like doing this. What was kind of like your first job or first like entrepreneurship experience?
A garage sale. Well, first it was lemonade stands very early on, and then I had this crazy idea. I said, we're gonna build the greatest garage sale ever. So I brought my cousins and some family members, and like I planned this for years. Like I started planning it when I was probably 7, and we executed on it like 3 or 4 years later when I was like 10 or 11. It took a long time to convince my family, but we had this like guerrilla marketing campaign, which was like we would go around all the neighborhoods and everyone put signs everywhere, put signs on, like big signs on delivery trucks because we thought the delivery trucks would drive around. We put Craigslist ads and all kinds of things just one day, and all these people started to show up to our garage sale. And that was like the most exciting entrepreneurial expression I had, to the point I had this whole binder like with all the business plans and the protocols and how we were going to do the garage sale. And I was like, this garage sale is going to be the greatest thing ever, and I'm going to do it every year. And like it just pumped me up. It got me so excited.
And you remember how much it sold?
So the first garage sale, I only made $60, so it wasn't very much money. My grandmother took a big portion of it. My second garage sale, this is called, hockey stick growth. My second garage sale made $1,000. So, and for a 12-year-old, I think it was like 11 or 12, that was crazy.
And what was your margin on the whole thing?
I wasn't honestly thinking about it. I have no idea. I was just thinking, how much cash did I get at the end of the day, which was all of it.
Were you kind of like buying the stuff from the neighbors and your cousins, or you're just kind of reselling?
I was just reselling it.
You didn't have the good books, so people didn't know how much they got for it.
I mean, I got screwed the third year around because I'd collected Legos all my life, and I had all these fancy Legos, and we had so many people showing up that my cousins were trying to understand, what should we sell? So they took my Legos and they started selling them off without getting my permission. And then my parents made me split it with my sisters. They said, I'm like, first of all, these are my Legos, so I get the profits. And 2, you're selling these Legos for way under market price. So that was the end of the garage sale after that.
After they took your Legos?
After they took my Legos. But it was a really good initial foray into entrepreneurship, and it set me up for the next thing, which was building apps. And so when I turned 13, my co-founder and I, we did that summer program. We met for the first time, and we said, okay, how can we make money? And it felt like every single small business wanted an app. I don't know if this was actually true, but we felt like it was true. And we started, learning how to program. So we learned a programming language called Swift.
What year were you at here?
This was 2013.
2013. So you were 13.
I was 13.
And then what campus is this?
This is at Northwestern University. So we're doing math and physics courses.
But is this like for like high school kids, or?
It's for Yeah, it's for high school. High school kids were in it, but we started at sixth grade onwards. So every summer we would go, and it was college professors that were teaching these classes. But every summer we would go do summer school while everyone else was in summer camp.
Oh, I see. So you'd go to the university and try to learn. And why did you pick this university?
I did not. My parents picked the university for me. So unfortunately, I didn't have too much of a say in the matter.
But did it have kind of like entrepreneurship vibe or no?
Nope, it was pure school. It was me and a bunch of really smart kids just doing college courses.
And then you met your co-founder there?
I met my co-founder there.
Because he was always also like,
yes,
had parents that made him go to summer camp, and he was like, okay, fuck this, man, let's build stuff, or no?
I don't think he was like, fuck this. I was like, fuck this. And I needed someone who knew how to code, because I didn't know how to code at the time. And he claimed he knew how to code. He didn't actually know how to code.
For a 13-year-old, maybe,
But for a 13-year-old. Right? But then we learned together. And from that experience, we would start to Skype. We would be every day on Skype. If you remember Skype.
And coding apps on Swift.
And we would code apps on Swift. And our first app was with a chain of gas stations. Our second app was with this Angie's List of Canada, like this marketplace.
Would you sell these apps? Or?
Yeah. Oh yeah. We would contract. So you would hire us to build an app for you. And we posted ads online and people would find us. And our company, we made up this slogan, 83% cheaper than the competition. But we didn't really know how much the competition was charging. But people thought it was a good deal. And we were actually probably significantly cheaper than the competition. But we would start to make all these apps for these small businesses. And we made like $30,000 by the time we were 14 or 15.
Did you remember ballpark? What was the cost of a project?
I mean, the cost of the project was our time on the project. So it was very small, a couple $1,000s.
And how much you charge?
Oh, it depends. Like our cheapest app, we probably did it for $5,000 or $6,000. Our most expensive app, we quoted for $60,000. We didn't get paid on the full $60,000, but we definitely got paid on some of it.
Man, and like, how long does this period last?
This was about 2 years.
It's 2 years. And how much did you make?
We made $30,000.
$30,000. So you were like 15-year-old now?
We were 15, yeah.
And you had like $30,000. What did you do with the money, man?
I was a complete idiot. I bought a pair of Google glasses. I bought one of those Segway things with your feet. And then I went out to dinner. So I discovered fancy restaurants. And there was one fancy restaurant in Ohio. And I felt like I was like a total baller. And I would go there with my friends. And I would go there every day.
And pay for everyone?
Sometimes. The first few times I did. But then we just split it. But I would get then we started to run out of money. So then we would just go, we'd get a salad, or we'd share a steak or something like that.
But like, would you go to these places with your parents every now and then, or no?
No, my parents were very like, we didn't go to fancy restaurants. We did not, at that point in time, we didn't do anything like that.
Because as doctors, they made like decent money,
yeah,
right?
But they were from India and they're pretty cheap. So we would eat at home most nights. We would do one vacation a year, usually to like Disneyland or someplace like that. We did 1 or 2 trips to Europe, but it was definitely not a luxurious experience. And
you had 2 sisters. You have 2 sisters.
Yeah.
And like, if we asked them about you in your teenager years, what would they say probably?
They would say I was a complete degenerate and that I listened to no rules and I was going to live. My sisters said 2 things. They said I would end up going to community college and I would live in a box under a bridge. I did end up going to community college because to drop out, so I dropped out of school to start Vise, and in order to drop out, I had to get a certain number of credits for my parents to be comfortable with it. So I went to community college on the side to take classes, and I was able to wrangle some credits together.
Why did you have to do that? So that you can get like a high school degree?
So I could get a high school degree, or like whatever the equivalent was, so I could leave 2 years early.
So you didn't do like the 2 last years of high school?
No.
And what point did you decide to like leave school?
Junior year.
And what happened? Like this business was going well, or?
Yeah, so we had, after the app development business had worked, so what ended up happening was Runic, my co-founder, was really smart and he's a brilliant math mind. So there was a research opportunity, one of his professors was working on it with MIT. So he started to do some part-time research with some professors at MIT on AI. And this is 2014, 2015. So we start learning about AI, specifically what's called to as restricted multimodal machine, or it's a type of neural network. And we're like, wow, neural networks are really interesting. What if we use neural networks to build apps? What if anyone could build an app idea by typing in their app idea and our system would program it for you so you wouldn't need another program? It's funny because this is like kind of the precursor to the transformer. And our company was called AI Labs, Artificial Intelligence Labs. And we hired a bunch of people we met on the internet. One of them had hacked into Sony Media and gone to jail. So our business didn't end up actually working out and it was a way difficult technical problem. But we learned about, AI, and one of our advisors was a former investment banker. And he said, look, you guys know all this about AI and machine learning, you should consult with these large investment banks. So we joined these expert consulting networks, and we consulted with Goldman and UBS and Morgan Stanley, and all these really big investment firms. And we realized, we're like, well, like we could explain how AI works, and they would pay us $500 to $1,000 an hour. So I would get up, I would leave class. I was a sophomore in high school. I would leave class. I would do a consulting call. And one of the projects was with a Mass Mutual, which is a big, insurance company's, investment firm. And
wait, 1 second here. So these guys, did they know you were like 14, 15?
No, they had no idea. Zero idea.
But the expert networks knew?
Nope, no one knew.
But they
eventually found out, and they fired us because we had to do a call, and Runik's video turned on. So we would do every call video off, and then the video turned on. It was in a high school classroom, and they were like, "You're not 18," and they fired us. But that aside, very, very traumatic experience. We learned about the wealth management industry. And when we learned about the wealth management industry, we realized that financial advisors are really good at relationships, are really not the world's best at managing money, and AI could help make better investment decisions on their behalf so they could focus on relationships.
Man, so you were like thinking of AI 10 years, like 7 years ahead of all the stuff that's happening here, right?
Yep.
And it's interesting because like neural nets at this point, they weren't the thing, right? Like people would say that like neural nets wouldn't work because there weren't like enough data, and like they were more for like support vector machines kind of things.
Yes. It was very, I call it frontier. It was very frontier. But the Attention Is All You Need paper came out shortly after, and like it was the precursor to the Transformer. So like it was all foundational to what ended up becoming kind of like mainstream AI today. But when we were doing this, we realized, well, there's this huge opportunity in financial services. It's going to be the most interesting application of AI, at least we felt. So we're going to build the company that's going to shape AI in financial services. And this was 2015, 2016 now.
And now you dropped out already.
And I just dropped out, and I moved to the Bay Area. Because all the great AI talent is in the Bay Area.
Yeah. Let's go a step back here. So you say you hired this guy that went to jail for like cybersecurity crimes, right? How did you afford this guy? Like with the consulting money?
We used consulting income, and then we would pay these people in like Venmo increments. So we would send them PayPals. We would we just did all of these things that were, scrappy.
Because you couldn't open a company, right?
Yes. And then we hired a lot of people that were on equity. So we promised equity in the company. We said, look, give us your nights and weekends, and you're going to make a ton of money on the equity. And people took us up on it. So the first 3 years of Eyes, when we started it, was all people working on equity. Some people working full-time on equity. And
these people know you were a teenager?
They didn't know until after we raised our seed round.
So no one knew, man. Like no one knew. You never show your face.
I was unbelievably embarrassed. So when I moved to the Bay Area, I did. We all snuck into this WeWork. I just looked really young, but like no one asked me any questions. And I would like avoid the question anytime it was brought up. And until after we raised money, and it was like a little while after we raised money, I didn't tell anyone how old I was. And then, it finally kind of happened.
And when were you able to actually open a company?
So I opened the company when I was 16, but I had to register it under my parents' names.
Oh, and they were okay with that?
Yeah.
Because they were kind of like, oh, so you're moving out, you're going to pay for your own stuff?
They weren't okay with it, but I just did it. Like, I didn't let anyone have a say in the matter. Like, when you know what you want to do, when you have your vision, when you have this, like, will behind you, you have your destiny. Like, I felt like this was what I was destined to do. There was no stopping me. Like, just no wall I wouldn't run through.
Man, you were probably a very unbearable kid at this point, right?
Unbelievably.
Like your friends from Ohio, they were probably like, man, like, what's the guy talking about?
Yeah, I was just like, people just didn't understand.
Yeah, well, I'm glad that it worked out, so shove it in their faces. And then you moved to SF?
I moved to SF.
Already paying for your own stuff with the consulting money, or
yes, but I didn't have very much money, so I lived in the Tenderloin, and that was really miserable. And the Tenderloin, for
reference,
Brazilian listeners, is the
like the favela of San Francisco.
Favelas. It's worse. It's really bad. It's like, people are doing drugs on the streets, and it's very unsafe.
And like, they're not criminals, they're crazy, right? They're insane. They just break your window, take your stuff, and they don't care about the law.
Yeah. And then I moved into a hacker house. It's called the Crypto Castle, and I lived there for 3 years almost.
Oh, this Crypto Castle, it was very iconic, right?
Yes, it was an iconic place. The first crypto companies were all started out of this house. But I lived in a bunk bed. So I slept on the top bunk. This house was really not very nice. and I paid $800 a month for rent. And some months I just didn't have any money, so they didn't, I ended up paying it later. And that was how I kind of survived.
And they'll take equity in the company as well, or no?
They did. The first investor in the company was the landlord of the house.
And he made a lot of money?
I think he made $1 million on it.
Wow, nice, man.
Yeah.
Probably the best investment of the hacker house?
I think it was Ethereum. Vitalik lives there.
Really?
Yeah.
Wow, that's crazy,
Vitalik
man.
was there. Who else was there? There's a lot of legendary people. George Hotz, who started Comma AI. A number of successful entrepreneurs.
Wait, you're telling me Vitalik would live $800 a month on a bunk bed?
Yeah.
Damn, man. Were you even crypto?
I wasn't in crypto. I just lived there.
You were just like, okay, this is where some cool people are, they're smart.
It was the only place that would let me in, because if you're 16, 17 years old, who else is going to let you stay in their house? Like, who's going to rent you an apartment? The first place I found on the Tenderloin, I found on like a web forum or something. And then they didn't ask, and then I had to realize I had to leave there. And then I got invited to this barbecue at the Crypto Castle, and I was telling him about how awful the Tenderloin was, and he's just like, come move in here. And then this was over the summer. I move in, and I just say I'm not going home, and stay out there.
Damn, man. Did something happen in the Tenderloin that made you move? Like, were you robbed or something?
I stepped on a syringe a couple times.
No way, man. Like barefoot?
No, with shoes, luckily. But it was still a traumatic experience. So.
Wow, man. And they were like, okay, fuck this. I cannot do this anymore. Let's go to Crypto House.
Exactly.
And then Runik was also leaving?
He was not. So Runik, my co-founder, decided to stay in school. And the plan was he was going to drop out, but he didn't drop out, and he went to college. He went to University of Pennsylvania in a very prestigious program there called M&T. And my whole life was falling apart at this point in time. Because the business, we were 3 years into the business, we didn't have any money, we were no longer consultants, I felt like my family didn't like me that much. Like, I was like, I have no other choice than making this business successful. So I moved onto Runik's dorm room floor, and I said, I'm not leaving until you drop out, and he had a mattress topper about this thick, and I slept on it, and luckily he had a single dorm room, and we would work during the day, and then we would, he would go do classes during the day, and we'd work together at night. And then, 6 months in, we ended up raising our first kind of 100, 200K.
Wait, so you were a fake UPenn undergrad for a while?
Yes, I was. I probably had the record for the most guest passes at UPenn. People thought we were dating, but we were not. And
yeah, it's like, how did you deal with this? I'm moving to San Francisco, I'm spending all the money, I'm doing everything, I'm taking all the risk, and Runik is like, nah, man, I just didn't
have a choice. I didn't have a choice. It was the best alternative. And Runik was very smart. I think he was just risk averse, as people tend to be. But it worked out in the end.
And what were you doing? Like, were you coding most of the day? Like, what?
Runik was coding. That was the other thing. I wasn't as technical as he was. I was trying to build pitch decks. I was trying to tell the story. I was trying to reach out to investors. I was reaching out to financial advisors. I was working with our team to formulate the product. All kinds of things.
Were you guys massively rejected all the time, or?
100 times. We would just rejected left and right. I am great at being rejected. So it helps you build a thick skin.
Damn, man. So 3 years of just being rejected, being suffering in the Bay Area. Because in Bay Area, the status is kind of all about your valuations and what you're doing and everything.
Oh, I would be grateful to have a valuation. I was not even, that is correct. But I was at a point where I didn't even have I would be grateful if someone gave me any money, let alone whatever price the deal is. Back then it was much, much harder to raise money. Now I could probably go there and raise money in 2 seconds. But back then, VCs weren't just doling out money.
Because there was not a lot of money in the market?
The VC industry was much smaller. This is 2018, 2019, 2017, 2018, 2019. It was much smaller. And the SaaS crash had just happened. Brex, was an exception, your brother's company, because they were magical because they had raised so much money so quickly, but that never happened really before.
So all the people around you, no one was raising, no one's making money?
No one was raising money.
Man, that's crazy. And then what happened? So you were in the dorms with him, just full time, telling him drop, and did he drop?
He did, after we raised money.
After we raised.
Founders Fund, Peter Thiel or Keith Roboy gave us our first check, and a few other investors. We raised $2 million, and his parents said, if you raise $1 million, we'll let you take a leave of absence. We raised $2 million, moved back to the Bay Area, and we started to build a business.
Wait, but there was this 100, 200K check before, right?
Yes, and that was from two founders, Nat Turner and Zach Weinberg, who started a company called Flatiron Health at Penn, and they sold it for $2 billion.
And why did they invest, you think? Because
I think they just liked us.
A small check for them, right? They were like, oh, these kids are cool. Let's give them some money.
Yeah, exactly. But it changed my life. That check literally changed my life.
But that still wasn't enough for him to drop out. You had to raise more.
But it took us probably 3 or 4 months after to raise more, and we were in a good spot.
Man, so like you got this money from consulting, you spend it like crazy. Now you get like this new money. Are you more of a cheap person now?
What? I was so cheap. I was unbelievably cheap. We were grown up in households where spending money was like you have to conserve every penny. And it was funny because after we raised the $2 million, we were still super kind of financially minded about being cheap and frugal. And our investors were like, we didn't give you this money to be frugal. We gave you this money to spend it and to grow, and you should be aggressive. And that was a complete just change in mindset because we didn't know, we weren't used to doing that.
And what was the product at this point, like when this first check?
The product was a platform that could take inputs about a client. So Ale is, 28 years old, and
this is my income, and
this is your income, this is your risk tolerance, these are your goals, and they would spit out stocks to buy and fixed income to buy and like tell you why. And it was like an AI financial advisor.
Like then the
but
user
we would sell it to the wealth managers.
So the wealth manager was the user.
Exactly.
So he would kind of like send me a link, I'd fill information or something?
The wealth manager would usually just fill it out for you.
Okay, so kind of like a tool for the financial manager so that they could
but
like automate.
We didn't do any
work.
Trading or rebalancing, we just sold it as software as a service. Then in 2019, we got registered with the SEC. We were the youngest people ever registered with the SEC. And the idea was, could we build a automated platform to do trade execution and to do all these things and do the asset management?
Okay, so before this, you're just suggesting stocks and bonds and stuff.
Yes.
So the next step is like, okay, can we actually like make these transactions?
Exactly.
And at this point, you already raised the $2 million.
We already raised the $2 million.
From Founders Fund.
Exactly.
Okay. And then like how many customers did you have at this point? Like were you actually making some money or?
We probably had like 4 or 5 customers.
I see. And
we weren't making very much money. We were probably making, I think we were on like a $60K revenue.
Wow, so a year?
Sorry?
A year?
$60K a year, yeah.
Wow, so barely any money.
Barely any money, yeah.
So you're selling like SaaS, $5,000 a year?
Yeah, I think it was like $1,000 a month and we had 5 customers.
Okay, and like were the customers kind of big or like small?
No, all very small.
And like, tell me a little bit about this wealth manager space. Like, who are these guys?
So wealth managers, it's one of the most interesting markets in the world, and it's very overlooked. There's $83 trillion of assets in the US, there's $140 trillion in assets globally managed by wealth managers. And it's grown year over year over year, and there's tens of thousands, hundreds of thousands of these wealth managers. And what they do is they help coach their clients, like a personal trainer would, about with their financial lives. So they help you with financial planning. When do you want to retire? When do you want to send your kids to college? When do you want to buy your house? How do you invest your money? And they're like their accountability function. And they do all the things. They help with the taxes and the prep, and you pay them 1% a year or 1.2% a year of your total dollar amount. And the idea is that they help create the accountability function for you to stay in the markets when the markets go up and down. They help you understand what's going on and why it's happening. They help you with all of the financial aspects of your life.
And when does someone like start seeking a asset wealth
That's
manager?
What's unique about it is that people think, the common misconception is that people think that only wealth managers are available to ultra wealthy people. But most wealth managers actually work with mass affluent people. So sometimes they'll go for clients that have no money, with the expectation that over time these clients will make money and become good clients. So it's like a venture investor. You have to find these clients early on and bet on them, and it'll grow with them.
And where do they like source? Is it like small businesses, like college kids, or?
It's usually, so wealth managers are usually like college students that they go to a training program at big investment firms like Merrill Lynch or Morgan Stanley, or I think in Brazil it's Itaú.
Itaú, yeah.
And they break away and they create their own financial firms after they get a little bit senior. And their clients are usually like family, friends, and people in their network. So they usually tap out at 100 or 120 clients, and it's all people they know or they have second degree connections with. So usually they'll join their local kind of country club or social groups, and that will become their client portal. That'll become their network.
I see. And you said they capped out at 100, 120, but that's before Vice, right?
That's before Vise. So with Vise, we believe that advisors should focus more on their clients and less on all the other things. And we can do a better job on all the investment decisioning and the trading and the rebalancing and the taxes. And Vise can handle all of that. It's their operating system. And they can manage 200 clients, 300 clients. They could scale much more significantly than the average firm where the advisor has to do it all themselves.
And a lot of their work, like before, was it like really like monkey job, just like typing stuff?
A lot of it, yeah. A lot of it was very, analytical. It was very manual. It was very time consuming, and we could automate all of it.
So you started with the form, like where the type information, suggest some stocks. The next step was like, okay, let's actually just like have them buy the stocks automatically.
Exactly.
And like, how would that save so much time? Like, because I imagine it wasn't just like clicking a button and buying, right?
It's pretty complicated. So we could probably do a whole episode on this, but you can think about it as there's a whole bunch of different workflows. So at the very onset, it's your existing portfolio, it's your existing preferences, your criteria. We can analyze all of that and then make your portfolio recommendation and how your financial planning goals, your timeline to retirement, all of these things sync up with your portfolio, and then you'll look at it and you'll say that looks good, and then they'll click trade, and then we'll trade all of the securities, and then you might have a cash request because your kid is going to college and you need to pay their tuition payments, or you need to pay for a medical expense or whatever it might be. We can tax efficiently draw money from the account and manage all the nuances of which securities to sell to minimize your tax impact, which securities to hold on to, which, maybe you inherit some money, how to effectively put that money into the markets and rebalance your portfolio. A number of different things that our software is figuring out, edge cases that we're doing on a constant basis. And then it goes even further. A lot of the advisor's time is actually spent on what happens when certain things happen in the portfolio, or in the market. So for example, the market crashes because there's a tariff war, right? Or there's a trade war. An end client is going to understand what's happening, how's it impacting my portfolio, what's most affected. Rather than the advisor having to do research on each individual client's portfolio, Vise's AI is doing an analysis on each portfolio and will give them a proactive answer of Sally Jones's portfolio is impacted by tariffs in these 5 companies. We've traded out of these companies, or we're holding on to these companies. Here's why. Here's some comms that you can share with your client. So it puts the advisor in the driver's seat 100% of the time.
I see. So you automate like not only the task, but also like all the research for him to be able to make the decisions. Is there also a consumer facing part where like reporting or?
Well, there's reporting, but it's through the advisor. Ideally, you don't need consumer portals, simply because the advisor wants the client to kind of communicate through them. Because if they see a portal and they don't understand what's going on, they might kind of freak out. Versus they call their advisor and their advisor can kind of coach them through what's going on and why.
I see. So the advisors don't even want to have like their own app to like let the consumer see their stuff.
Exactly.
Do these consumers they usually also use Robinhood or something?
Yeah, sometimes for a portion of their money. So they'll usually have what we call it a self-directed account, and they'll use that for a portion of their assets and call that like their fun money. They'll trade on it, they'll gamble with it. But a majority of their money in their retirement account and their savings funds are managed with their advisor in long-term stable investments.
And their advisors have like visibility on what they're investing, or is just like, okay,
most of the time, no. They just have visibility into what they're managing, not what the end client is doing separately.
I see. So, and many times I imagine like a person with more money, they'll have maybe multiple advisors, or?
Yeah, sometimes they have multiple advisors, but the right thing to do is actually centralize it with one advisor.
And what do you think is the main value that the advisor is generating here, right? Because naturally there's a good business for him. He builds relationships and everything.
The same analogy is with a personal trainer, right? Why do you use a personal trainer? The reason why is because it'll force you to show up to the gym every single day, right? Or every other day. The reason why you use a financial advisor is it'll force you to stay invested, to invest in the markets, to continue doubling down in the markets day after day after day. Whereas most investors naturally get scared when there's ups and there's downs and there's highs and there's lows. And the right thing to do over a long period of time is just to stay invested.
Like don't freak out when you don't understand stuff, right?
Just ride the market.
And like, this may be a stupid question, but like you say that you start like today you do a lot of the trading with AIs and make a lot of the decisions with AI. But like, isn't it hard for you to beat the S&P 500 in the US?
You're not trying to beat the S&P 500. You're trying to build a customized version of the S&P 500 for each individual client, or whichever index might make sense. So the NASDAQ has outperformed the S&P 500, or different indices perform the S&P 500. But your key is you want to build a custom index. So imagine your own version of the S&P 500 tailored to you. So for example, if you work at a technology company, the S&P 500 is weighted heavily towards technology. So you should have a little less technology. You should have S&P 500 minus technology, because you work at the technology company, you have technology stock, it's highly correlated to the rest of the market. So you should customize the portfolio, or customize the index around you. So the idea is that even if you buy the S&P 500 and you just hold on to it, you're not actually buying the S&P 500, you're buying the S&P 500 plus the risk you have in your personal, your life. So that's number one. Number two is taxes. Tax loss harvesting is what it's referred to. So sometimes there's volatility, and when there's different companies that are up or down within the index, you can offset losses with gains, and you can do that on a frequent basis with algorithms. So at the end of the year, you can create a big, what we call it, a tax loss, and use that tax loss to offset gains in your portfolio, so you don't have to pay as much in taxes.
I see. So it's kind of like building a version of the S&P 500 for the person's own exposure. So,
exactly.
And also having a lot of tax gains by like buying, selling, and declaring it properly.
Exactly. So it's all algorithmic, but you can think about it, we call it a personalized portfolio.
And do people kind of expect to have like the same returns as like some index, or?
Yeah, it's customized returns based on the client, we call it a blended benchmark. So some clients might want 100% equities, some clients want 10% equities and 90% fixed income. So based on your asset allocation, or your mix of equities, fixed income, and alternative assets, will create what your return expectation should be.
Wow, let's go a little back in the story now. So you guys are raising like $2 million from Founders Fund. You have like 4 or 5 clients, not a lot of revenue. And like, how big were these wealth managers? Like how much?
These were small. These firms managed $10, $12 million.
And what does big look like in this space?
$400 billion.
But that's like a bank or a fund or something,
they're
right?
RIAs, they're independent investment firms. So these wealth managers are getting really big. So our biggest clients have hundreds of billions of dollars in assets.
No way, man.
Yeah.
Like you just have like a massive team of advisors that's bringing more important people.
They manage significant portions of global wealth.
And is the market, is it mostly fragmented, or is it mostly concentrated on these huge guys?
Very, very fragmented.
So like
it's becoming concentrated, because what's happening is advisors are getting old, so they're selling their practices, or they're selling their books of business to bigger firms, and those bigger firms are scooping them all up and becoming concentrated. So now we focus our business mostly on the big firms. So there's about 200 big firms. That's most of ICE's business.
Oh, so you guys started by focusing on the long tail?
Yes, and then we've moved up market to enterprise.
And when did you guys move from like just charging SaaS to charging different
In
models?
2019, 2020. So we realized that the better model is we could get basis points, or like percentages of our assets. So if we manage $20 billion, or $30 billion, or $100 billion, we could get 0.5%, 0.25%, which was a huge amount of money, as opposed to just charging a per seat software license.
And like, did that impact directly, like from the moment you changed, was there like a hard time with the wealth managers, or?
No, it was actually better, because we replaced what they might have been in before, which was mutual funds or ETFs that charged a similar, if not a higher fee to the client. So we were giving them a better portfolio that was more tax efficient, that was personalized to their needs, that was at a lower price.
But weren't you buying these ETFs and paying these fees, or no?
We weren't. The end advisor, the end client, whoever owns the ETF, pays it in the form of an expense ratio.
But to you, not to the...
To the ETF manager before, but then after we became registered with the SEC, then they paid it to us.
Oh, because you became an ETF manager.
We replaced the ETF with the form of a custom index.
Oh, I see. So you have like, you create a custom index yourself, and then you get like fees on whatever the custom index they're buying. I say, okay. And then like, after you raised the money, how did you spend it, man? Like the first
$2 million, we were very conservative. And then we ended up, discovering the business started to grow very fast.
But like, you hired like 1, 2 devs?
We had a small team of 6 people. So a few software engineers and then a few salespeople, or like sales/operations people. And that was about a year. And then after that year, we had started to grow really fast, and we met a venture fund called Sequoia Capital. And they really liked our business. And they said, all these advisors are leaving big institutions and they're going independent, and they need the software, the next generation of software that's going to power them. We feel like you guys have built that software. And they led 3 back-to-back financing rounds of Advise. And we'd raised $50 million in a very short period of time, maybe more than that. And
so they kind of like already had this thesis in their mind. They were looking for like someone that was building it.
They had it at a high level, but they met us and we really clarified the thesis for them.
And they were like, okay, these guys are going to be the winners in this space.
Exactly.
So you did like 3 back-to-back rounds. What is back-to-back? Like 2 months away or?
2-3 months between each round.
And how, like why? Like,
because they just liked the business.
So were you spending the money or
we
just
did start to spend the money. We hired a lot of people. So we scaled from like 0 to 6 people to 100 people in a year period, which was a bad decision.
Man, that's crazy, man. So like a lot of shit people you hired probably.
Yeah, and we hired them all remote. So we had a lot of founders that had scaled other companies that had given us a lot of bad advice, which...
Like my brother, for sure.
Yes. Which was hire big executives, and those executives will know what to do, and your job is to hire a lot of these executives and manage them. And when those executives go out, they hire a lot of people. And these people just tend to all suck. And we just made a series of bad decisions, and we had to undo it. We had to fire everyone.
And the executives, like, where did you hire them from? Kind of like Facebook, Google?
Facebook, Google, Dropbox, Trip Actions, all the worst places.
And then like they kind of like had this mentality of like I'm
big company mentality.
Like
I'm gonna not work that hard. I'm gonna try and get rich. Otherwise I'm gonna bounce. I'm gonna like my way or the highway, and I'm gonna hire a lot of people
to do the job because they didn't want to do the job.
Exactly.
And then like most of the people were like a bunch of engineers, a bunch of salespeople.
We hired a lot of engineers, a lot of salespeople, a lot of operations people, a huge people team. I'm highly against people teams, but we had a whole bunch of HR people. It was a nightmare.
Man, what do we have against the people teams? I'm also against them, by the way.
I just think that people teams are a huge waste of time. But it's good to have a good general counsel to make sure that people follow in line. But you want recruiters that are embedded in the teams, that are like basically the team lead, because they have to take on more accountability. You don't want HRBPs because they're going to just set up unnecessary rules, and they have to find a way to justify their existence, so they create more and more conflict. It's generally a bad idea to have a people team.
Man, justifying their existence is such a huge thing, because they're like, okay, I don't have a full-time job. Someone's going to notice this. I have to create problems.
Exactly.
Yeah, man. And like you said, like it was really a series of bad decisions, like for sure due to the cash burn. But like, do you feel like it actually became the product size slower or no?
Yes, the product slowed down. Everything was bad. 2021, horrible year, worst year of my life.
Like 5 people, it was faster than
5 people
100.
was faster than 100 people. But then we scaled the company back down to 40 people, and everything was great. And it took us 2 years to recover from it. But we built a better product. We grew faster. Runic and I got involved in the key details and sales, on product, on everything. We were no longer focused on pie in the sky recruiting, and the business just started to take off. And we were the first company to do, layoffs and all of these things, even when we had a ton of money, because it helped reposition the business to the right team and the right group of people we needed.
And when was the $1 billion round?
That was in 2021.
In 2021, before everything
blew up.
Before everything blew up.
Yes. We were one of the earlier ones to do it.
So like when you like did the $1 billion round, were you feeling like, okay, I know exactly what I'm doing, everything is going great, or not really?
I knew what I was doing from a product. I was so confident in our vision, in our product, in the market, in the story, but I had no confidence in my ability to build and manage a team, like build a company. And we didn't know what we were doing. We thought we kind of knew what we were doing, but like we were getting a lot of advice, and it was just bad advice, and we had to learn the hard way.
Man, so like your unicorn round, I've heard that it was one of the most stretched in sense of multiples, right? Because at this point the company like had a great vision, a great space, but it wasn't still making a lot of money. And like people talk a lot about this thing of like raising high, like incredibly high multiples. Do you think like it's actually bad, or?
It's bad if you don't have a clear use of proceeds. So we had I would call it like it was a stretched round. I mean, it was also unique because I had done it when I was 20, which was kind of like I didn't know any better. I was kind of naive.
You're like, unicorn, fuck yeah, man. It's high status, Silicon Valley.
High status, exactly, right? And it's funny because like we've just now started to grow back into that valuation, but it all depends on, if you have a lot of capital, it burns a hole in your pocket. And I think that we burned too much money unnecessarily, because we thought that hiring people would lead to more growth, and that was the problem, less the valuation. We just raised a lot of money. I think the right thing to have done was either to raise way less money or to raise way more money. And if we raised way more money, we could have gone and acquired a company and transformed that company with a lot of pre-existing distribution with our great tech. So I think that if I had to do it over again, I would have done one of those two paths.
And like, if you had to like raise less money, what would you not do with the money? Like, what would you?
I
not
wouldn't
spend?
hire senior people. I would hire homegrown talent, and I would, scale up that talent. I'd hire a lot of really smart, high capability junior people or high agency, player coach type people that actually did the work. And I would be way more in the details early on in product and in sales as I am today. And I would just focus on the things that matter, which is getting more customers, driving adoption, having a product that can support it, less about press and optics and, raising money and being around fancy people and all the things that come with being a unicorn founder.
And like at this point, like before you had all these realizations and the company kind of had this meltdown, how would you spend your days? Like, what would you do?
And talk to your brother about how to build the business and how to recruit people and which person I could get and they couldn't get and, how to raise more money and all these things that just were the wrong thing to do. DEI, we talked a lot about DEI because my team was really concerned about it and like current events and just not the right things.
And then like, would you spend like a lot of time talking to investors and networking?
A lot of time talking to, a lot of networking. And it was great. Like I networked better than anyone else, probably at the time on earth. Like I built an incredible network of the most powerful people in the world, which has been very useful, but I probably spent a little too much time on it. And part of it was, it just happened by nature because people they saw me as like the unicorn dream kid. So they just started introducing me to everyone. And it was great because I got to get to know everyone, but it was a distraction.
And what were the things you think you should have spent more time, which are the things you're probably spending more time on?
Product and sales, that's it. All that matters is, are you getting in front of the right customers and are you solving a problem that they need and do you have a product that's strong enough to support it? And it's funny, the sad thing was we're so good at those things. So good at those things. So us not focusing on it let the quality bar drop. But then when we got back in, we really pushed the bar forward.
Yeah, man, I'm so happy that you guys figure it out. And then you go back to like, okay, now we have to lay off all the people. Like, how was the layoff? Like, what's the process?
I fired every single person myself.
Every single person. So
yes.
Like over 60 people?
More. I think it was like 75 people.
Now, how did you like choose who stays, who goes? It
was really hard. I went person by person, team by team, and I just asked people. I understood like what are different people doing. I tried to get into the details on it. I'm sure I might have made one or two mistakes, but for the most part, I think I got all of it right.
So like, you talk to everyone in the company and you say, oh, what do you think of this guy? What do you think of this guy? What do you think of this guy?
Where's the output happening? Who's a culture carrier versus a culture detractor? All of those types of things.
And when you say like a culture carrier, what do you believe are the good culture things for Vice?
People that are really oriented. I have three values. They're really critical values. The first one is customer obsession. I want people that are thinking about the customer problem, the way the customer thinks. That is how they do their job with the customer in mind. The second is 1% better every day. If you compound at 1% better every day, you're 37 times better at the end of the year. So I want people that are thinking, how can I get a little better at my thing each and every single day? How can I improve each and every single day? Same way we did. We improved a little bit each and every single day. And then the last is burn the boats. This is my favorite value. We want people that are dedicated, that are all in, that are not looking back, that are not thinking about plan B, that are not thinking about the next job. All they care about, they want to define their career by their employment advice, by solving the customer's problems, by getting a little bit better, and they are dedicated. They're only going to return home on the ships of their enemies. They're burning their boats.
And how does that manifest itself, like in the day-to-day work, kind of?
People will. It's conventional with the people that show up to the office every day, the people that stay late, the people that really put in the extra level of diligence and care in every single thing they do.
So like overall, you have to see that like the company is the number one thing in their lives, just like it is for you.
Exactly. They care just about. It doesn't have to be the number one thing. I mean, I think people's families are important too, but it has to be one of the most important things in their lives.
I see, man.
Like it has to be more than a job. It has to be a mission. It has to be a purpose. It has to be a calling.
I see.
People who just want jobs, they should get jobs somewhere else.
Somewhere else, right? Not a startup.
This isn't a place for people to get jobs.
It's a place for people that want to build the future of the financial advisors.
Exactly. It's the people that want to, we almost position as they want to change the wealth access gap. They want to create financial freedom for everyone. if Vise is successful, it means that more people are going to be able to retire on time, more people are going to be able to send their kids to college, more people are going to be able to buy their home, more people are going to be able to live the lives they want to because they can kind of hit their financial goals. Because we are propelling people to unlock financial freedom in a way they couldn't have done before. So the mission is almost even more important than can we make financial advisors more productive. The mission is, can we secure the future of the American economy?
And so you believe that there should be more financial advisors?
Yes, I mean more financial advisors, but more importantly than financial advisors, more people that are managing their money in the right way.
Okay, so and you believe that like by giving more technology to financial advisors, they can have more customers, and the good ones can have more customers and give better advice and help them run their lives.
And bring the costs down and, all the benefits.
You see. Yeah, and then like, I still have a little hard time because I don't have my money with a financial advisor, And I kind of like never liked them very much, honestly.
It's all about the right person.
So yeah, but I like your analogy, which is like about the coach, right? Someone that's on top and helping you like keep track of your goals and where you want to get, and tracking if you're spending money where you shouldn't, and making sure. And they don't have as much time to do that today because they're drawn into useless stuff.
They're just managing. It's just too hard. They're spending too much time on too many different things.
And then like once Vise automates most of the work, gets everyone their personal.
Entirely on their clients.
They focus entirely on them and like making sure that they're following the right path and giving them all the best advice. And then the future of America is secured because people are spending money better and saving better and investing better, and the economy flows faster.
Exactly.
I see. Man, that's great. And then do you use that a lot when you're like hiring, pitching, like do people really care?
Should.
More on the mission.
On the long-term mission. Yeah, I mean, most of the mission we focus on is around the advisor, but we should talk more about the end client, the impact.
How like it actually changes everything, right?
Exactly.
Yeah, because many people like look at, I don't know, my business education, so it's very like clear mission, like save the world and everything. But like even Brex, for example, I was talking to Rinke about this, and he was like, yeah, man, but like we automate all the work so people can focus on product, and when they focus on product, they make better things, and then the world becomes a better place. Everybody has to help in some ways, right?
Right, that's correct.
And it's the exact same thing you are doing. Man, let's go to fundraising. Like you're very exceptional at fundraising, many people would say. Do you believe that's true?
Yeah.
And then, like, what do you think makes that?
But it's less about fundraising, it's more about sales. At the end of the day, your job is to connect with people, to be able to communicate a big vision, to be able to show your process to solving that vision, and the grit and resilience to sticking it out where other people wouldn't. And I think that's all. It's a very simple story. I think the other aspect is, most people aren't leaders, they're followers, even people in positions of leadership. And you notice this mostly with investors. So it's how can you surround yourself by the right people that are going to position you to succeed, and other people believe will position you to succeed. So they'll follow, they don't have to lead.
And like looking at the old Samir in the UPenn dorm, that wasn't able to raise any money for a long time, what advice would you give him back then?
Don't stop. Just keep driving. Keep driving it forward. I think
like fundraising, kind of like, what did you do wrong back in the day that was?
I would be more strategic. Before, I would just scream from the rooftops, and anyone who would listen, I would try and pitch. I would have been more strategic about, here's what you've invested in before, here's why that investment did or didn't work, and how Advise is similar. Most VCs pattern match. The reason why they liked us is because they thought we were like the Stripe founders, and the Stripe founders and the business was like Stripe. I think that if I understood how investors pattern match and how this business was like other businesses they'd invested in, I think it would have been made easier to raise money.
And like, probably the way you get to investors today is very different from the way you got back then. Probably back in the day, you would just like fill the forms, cold call, cold mail, like invest in my startup, please.
Exactly, and warm introductions and social proof is very important.
So would you do kind of like an angel round to bring like a lot of people on board before?
The first thing I would do is bring on the most valuable angels you possibly could, who know people and can introduce you to their networks. And then I would bring in big VCs. I think people go too soon to the big VCs. I think the key is you want to build a network of really strong angels first.
So that when you get to the big VCs, they have a bunch of people that can talk good stuff about you and say how amazing you are and build the conviction.
Exactly.
for them to invest. And after you get a big VC, everything becomes much easier, right?
Yep.
Did you have after Sequoia led, did you have a ton of people?
The list was as long as you could think it was. It was a long list.
Would you take the meetings or?
Oh, sometimes, but sometimes I also thought it was too hot, so I just stopped taking the meetings.
What do you think?
Depends. I mean, most investors we felt like we didn't really need them after we brought on big investors.
I mean, looking at all these great investors that you brought on, how many of them do you feel are actually value add? Come on, Sequoia is, right? Because at least they give you the name to get more investors. They give you the name,
but it's actually more harmful than it's helpful. The reason why is because when you bring on a big name, people think, oh, this company's vetted, there's no risk, it's going to work, I'm going to just join that rocket ship. Versus when you have no-name investors, people are only drawn to your business based on you and the mission. When you have Sequoia on board, so many people are drawn because of the money and the capital and the status that you don't want people that are attracted to status. You want people that are attracted to solving a tough problem, because all businesses are not up and to the right. You have to go through, hell and back. And you want people that are going to go on that ride with you.
And so were you to become an investor, like a VC, have all these contacts and raise a lot of money, how would you behave?
Most VCs, and I'm sure you've noticed this because we have friends, have become VCs, change as a person. They become worse people. And the reason why they become worse people is because as a VC, you don't know if you're successful. You think you might be successful because you had a markup or your investment went up or whatever it might be, but you're judged only based on your reputation and how much people like you and are willing to be in deals. So you're constantly changing your personality to this transactional deal monster who's fake and doesn't necessarily show off the best, not very genuine, because you're constantly judged by what people think of you and how you're perceived, and it's really toxic for your personality. So if I was a VC, I would just do my best to try and not. I probably would never be a VC. I think it's good to always invest, and I like to invest, and I invest in your company.
Yes.
But I think that it's being a VC changes your personality, I think, for the worse, and I think that it's tough.
But do you think it's possible to be a value add VC or no?
Yeah, Founders Fund's my favorite VC of all time because they'll give you advice where you need it. They're never going to screw you over. They're always going to have the back of the founder, and they focus on giving you capital and leaving you alone. And I think that's really valuable as a VC. I think it's helpful to have angels who are well networked and be connected, but you don't need a VC that owns 20% of your business to get value add. You can get that from angels that put in $25K.
And you feel like the amount that people help you is more proportional to the money they invested or how much they like you personally?
It's probably more how much they like us and believe in the business. We've had some people that are incredibly helpful that have invested $5,000 in our business. I almost think that my time with VCs was inverse to the success. The more time I spent with VCs, the less successful the business was. The less time I spent with VCs, the more successful the business was.
So what you're saying is mostly to VCs, but the angels generated a lot of value overall.
Exactly.
And when you say a lot of bad advice, would it mostly come from the VCs or? Mostly
from the VCs because their incentives are misaligned. Their incentives as a VC is to get you to grow as fast as possible by spending money so they can continue to deploy more money and they can continue charging fees on that money. And, only pattern match based on companies they've particularly seen, but those companies are probably different than your business. So their advice is skewed. It's not from a first principles. Sometimes it can be if you've kind of founder-oriented VCs, but for the most part, you have financial people that are trying to give operating advice, and it's really tough.
Because they haven't built anything themselves, right?
Even VCs that have built things themselves are very skewed by their own experiences.
So what worked for them, they believe is going to work for every business.
Or what didn't work for them. It's just every business is its own unique journey.
Was there some big investment, a lot of deployment that you did that was a huge fail?
What do you mean?
I don't know, you invested a lot of time, a lot of money into some project, some feature, some relationship.
So many things. An unbelievable amount of things were fails, but the only thing that matters is the one success.
And what was the first big success that you felt after we launched this, it was kind of changing?
I think when we first launched the product as an asset management business, it was a wild success. We grew from $0 in assets to $500 million in assets in a very short period of time. But I would say that the real big success was when we launched the enterprise product, and it took a long time, but we got billions and billions of dollars of scale very quickly.
Yeah, it's kind of It's very interesting to think that you decided to go enterprise because the product becomes completely different, right? A lot of things you never expected.
The vision is the same, the complexity becomes much more different.
How did it change mostly? Like, what surprised you about the enterprise market?
More permissioning, more edge cases, like very little room for error, a lot of integrations, a lot of SOC 2 and other compliance checks, you name it. We've gone through all of it.
And then like, did you start with like one big enterprise that you're kind of building for them?
Exactly. We co-built with one of the biggest RAs in the US.
And then like, it was something that someone that already used your product and was like, man, make this better.
Exactly.
And they were like, okay, this guy wants us to make us better. If we make it better, we can also sell this to all his competitors.
Exactly.
Oh, and he enjoyed that in the end? Because now he has a great product?
Exactly.
I see. And then like, how would it change like the financials? Was it mostly because like the margins probably were small with the large enterprise, or is it the same?
No, the margins were the same, and it's all margin.
So mostly just like instead of doing...
The beauty of our business is it's 100% margin. Very, very limited. It's data costs, it's a little bit of service, but it's a huge amount of margin on a huge amount of assets.
So everything that comes in goes well?
Goes to the bottom line.
And at some point the company got profitable, or?
We'll be profitable shortly.
Shortly. So heading towards, are you aiming towards that?
Yeah.
So you don't want to raise more capital? Or?
We could raise more capital, but we don't need to.
So what's your current philosophy? Like, what would make you raise capital?
To go make a big acquisition.
Potentially like of a large firm?
Exactly.
Of like another software firm, or like it just...
I don't know. Maybe a traditional asset management business.
Because this been happening a lot, right? As you mentioned, like a lot of the larger ones are buying the smaller ones, so the market's consolidating.
Exactly.
And why is that happening?
Because it's demographics. Advisors are getting old, they want to retire, they need money to retire, so they have to sell.
Well, like when Sequoia invested, the thesis was kind of the opposite, right?
It's the opposite. People are leaving big institutions and creating their firms.
And that's not true anymore, or is it also true?
It's both is happening. People are leaving and then people are getting sold.
I see. So like people leave, they build something, they get to a decent size, someone goes and buy them.
Yep, exactly.
So there's even more incentive for someone to leave, right? Because
there's more incentive to leave, exactly. It's a huge financial payout.
And like, how much does the like, do new firms become enterprises?
They can, yeah. A lot of enterprises started off as very small firms 10 years ago and are now worth billions of real dollars today.
Oh, so they're kind of like a high growth business many times.
Yeah, it's like startups. I mean, there are some businesses, the wealthiest RIAs are worth tens of billions of dollars personally.
So in Brazil, like the two biggest ones in this space are XP and BTG, right? Where they have like, they give their brand and everybody kind of owns their own office with their brands and uses like their resources. Does something similar happen here with?
They have that. They also have fully independent firms where they're not associated with the BTG or.
But it's not like the main.
Exactly.
Main. So the main are like the big brands.
Exactly.
What is like a big brand in this
Morgan
space?
Stanley, Merrill Lynch, Goldman Sachs.
Let's see. So it's kind of like Morgan Stanley representative. Yeah. But like, will you eventually sell to Morgan Stanley?
Yeah, we could. For sure.
But then like that would be like kind of like their own wealth management division.
Exactly.
So let's get into the business learnings and specifics, man. So you started like an AI company way before its time, perhaps. Mm-hmm. When did it start? Like the technology started getting there?
Not until more recently. The AI itself. The problem with AI is there's always been kind of this hallucination or misunderstanding problem. Like advisors couldn't handle a black box, so we had to back away from some of the AI technologies we used in the early days. But it's just now starting to get there. But AI is not well equipped for enterprise use cases because it still has a tendency to lie to you. And you can't have that in an enterprise application.
And how did you deal with that?
We created redundancies with traditional kind of quantitative means of doing investment research and creating portfolios. We run alongside the AI.
What does that mean? Like you base the AI on?
We built statistical algorithms that the AI would direct or work alongside that we'd basically check our work with.
I see. And then like you said Products Today does a lot of research. Whenever something is happening, you quickly give them the information.
That is all AI driven. It's still subject to hallucination risk, but we can the AI can prompt our quant model to generate insights, and then it will recommunicate that insight in natural text, as opposed to determining the insight with the natural text. It's a little complicated, but the simple way you can think about it is the AI is going to direct traditional algorithms that won't screw up.
So they like you have like a source of truth which does not hallucinate,
Exactly.
and then it just interprets what's there and puts it into readable language.
Yes.
Pretty much. Okay, and then what are the like the main uses you see like in the financial markets where AI can shine today?
Workflow automation around paperwork, document signage, portfolio reconciliation, so understanding what's going on in your portfolio and your trades and reporting on that, all kinds of things. Reporting more broadly, what's going on, a whole number of different things.
And do you feel like people are attracted to your product today because of the AI or because of...
I think they're attracted to it because of how much time it saves them and how it delivers a better result through kind of personalization. And I think the AI is a supporting element to that. But I don't think people use it purely because it's AI.
Like if a customer were to like refer you to someone else, what do you believe they would say?
I think that they would say that it's changed how they run their business and allows them to deliver more with less.
So, but they would probably say about some feature, right? That they would
they would say it allows us to build a personalized portfolio for our clients in minutes instead of days or weeks. And it allows us to create a better offering to the client through tax loss harvesting and the personalization aspect of the end portfolio, and then all the time it saves the actual advisor, so they don't have to hire as many people. They can scale their team more, and they can save time.
And then in the last couple of years, you said that as you were focusing more on the product, on the evolution, do you feel like as you were adding more features, like was it kind of like getting better one step at a time, or like something happened that kind of like changed the course?
I would say it was one step at a time. There was not one particular thing that happened. I think the enterprise breakthrough was one particular breakthrough, but it took a long time for us to actually realize it.
It like probably took a lot of time to build before the product was kind of like ready for enterprise.
3 years.
And when did you start this journey then? 2021?
2021, 2022. And it was just ready kind of this year.
Wow, that's so painful, man.
I know.
Because you're like...
Pain's my middle name.
You're like, wow, man, is this going to work? Am I going crazy here? And like, should I be focusing?
The best things in life just take time.
In like the mid-market or smaller firms today, like they're still relevant to the business, or?
They are, yeah. But we're looking for firms that are growing a lot, that will eventually become the aggregators. They'll eventually become the enterprises. So think about the small firm with a mighty management team that's growing really fast, that is ambitious, not the old firm that's looking to retire.
Do you reject the small old firm, or kind of like?
Usually, yeah.
Is that because like the cost to serve is not worth it, or?
If they're really excited about our business, sometimes we'll service them, but for the most part, we want to work with the ambitious firms.
I see. So like not even worth spending time on these guys.
Yeah, we don't go out of our way to service them.
And how do you acquire these guys today? Is like mostly like sales team? Do you have
we have a sales team, but I spend a lot of my time going and spending time with RAs and getting to know them and their problems and their business and exactly.
So you're the main sales guys for the company today, right?
Yeah, but we're doing much bigger sales, so they're very strategic.
I see. So you don't have like a huge sales team trying
very
to
small
sell.
Sales team, 10-person sales team.
Is it kind of like everybody kind of like focused on helping you, or they're also like running their own deals?
They're doing their own relationships as well.
I see. With like maybe smaller firms.
Yeah, exactly. Or supporting the big ones.
I see. And what do you mean by supporting?
They're doing adoption. So we will sign the overarching firm, and then other salespeople actually activate each of the individual advisors.
I don't understand. So they have like smaller advisors that...
There's advisors that work at the firms. Okay. And then we have to train them, we have to bring them up to speed and help them use the software and onboard their clients.
I see. So like not so much like closing the deal, but like actually getting them to run.
Actually implementing it, yeah.
And it does take a long time for them to run?
Could take a long time, yeah. It could be short. We've had some that get up to speed in weeks. We've got some that take years.
Wow, years to get it because the team is too big, because they're not like motivated?
They're very big firms. There's a lot of people.
It's like for them to start getting value, most of the teams needs to be like using it properly, or like if one person uses it, like kind of makes the other people want to use it as well.
Both. So sometimes there's influential users and it'll require everyone else to use it, and sometimes it's just mandated by the firm to get everyone on it.
Yeah. So how was the transition for the enterprise sales? Let's kind of like look at the process here. Like how do you source leads? Like how did you learn how to source leads?
We will typically partner with the private equity firms that own these firms and give them a pitch as to how it'll create a bunch of kind of financial value, and then they'll introduce us to their portfolio companies that are the CEOs of these really large wealth management firms.
So the private equity have like wealth management companies under them?
Yeah, they own them. They're like portfolio companies. They're investors.
I see. So they like there are specific private equity firms that like focus on this thesis. That have like a bunch of them, and
Exactly.
then so the first sale is like, okay, you get connected to this guy in the private equity through some warm intro or something, and
Yep.
then like you make them believe the dream and how you're gonna change the life of their investments and make him more money, and then like they kind of like top down to the CEOs,
Yeah, exactly.
pretty much. So the main channel for you to like acquire leads today is partnerships with private equity funds.
Exactly.
Damn, man, that's such a specific strategy. It's barely usable for anyone else, I think.
Yeah. But it creates value.
How did you come to that? Like, was it?
It's incentives. It gets back to who cares about driving change. The CEOs and the private equity firms. So how can I be in a place where I can convince the people that need to drive change that we can drive the change?
And what's the CEO's incentive?
The CEO's incentive is to maximize shareholder value. And they create a better customer experience.
Yeah, that makes the private equity guys make more money, and then like below the CEO is like all the people that are also going to use it, and for them it's like, okay, they're not going to have to work.
Makes your life better, yeah.
I see. And then what kind of like makes your sales process hard many times?
They just don't understand the technology. They're too lazy to make a change.
Like the CEO, probably?
Yeah, the CEO or the team, the underlying team behind the CEO.
They're kind of like, this is how we have always done things. Let's keep it this way and whatever. Screw
Exactly.
that. I see. There's like a lot of competition in this space at this point?
The competition is status quo. So it's like, to use the Brex analogy, there's a lot of concurs out there. There's very few Brexes.
I see a lot of people that just use whatever.
Legacy software, manual processes, very different than anything automated or tech forward.
I mean, you guys are like made a lot of noise overall. Why do you think there's not a lot of competitors?
Because it's really hard. People have tried. A number of people have tried. But it's a hard space to understand. It's very nuanced. It's very old. So you have to have a really deep market understanding. It's unbelievably difficult to compete in this space.
I see. So people have tried. They cannot raise enough money for them to get to the product to the point where it matters.
Yeah. And they don't have enough passion to keep them going through it. Most people just don't care about RIAs that much.
They probably just say, okay, man, let's just do something else. Screw this.
Exactly. We've had a lot of competitors, but a lot of them that have tried and failed.
And like no one kind of like bothers you nowadays in that regard.
We have a few, but they're all mostly legacy companies. We have better tech than all of them. So
I see. So most of your conversations are more about like, man, you have to change. You have to do things differently. You have to automate. You have to use AI. You have to make everything better. And then, like when it comes to defensibility, do you actually need to worry about that, given there's not that much competition?
You always have to worry about it because you want to constantly create a culture of creating a better product. But for the most part, no, I'm not worried about, like, I think we're going to continuously think about solving our customers' problems first and build a better and better product.
Man, it's so interesting that you have few competitors because like in the end, your defensibility is just the amount of software that someone has to build to kind of compete with you, right?
Yeah. But it's more than just software. You have to build software, the asset management business, you have to build connections into everyone else. It's more than just building a software. You have to build a trading team, you have to build it's a very complex business to build.
And then like, do you feel like as you're focusing more on enterprise, does that open more space for competitors trying to take like the other spaces of the market or?
Maybe, but it's hard to see scale in that part of the market because of how fragmented it is.
Because as you start to go more for enterprise, naturally the product starts to become like more and more complex and harder for you to do. Did that actually happen?
It does. It's a very complex product.
So today, like for someone to onboard and start using it and like actually understand everything that it does?
Yeah, it's very complex.
So when you think about like new features, when you think about new features, are you mostly looking at like how am I gonna like onboard these guys quicker, or like how can I automate more things for them? Like how do you look at your product?
Yeah, how do you onboard more and how do you solve more of their problems?
How do you kind of like prioritize today? Like what's you feel like is lacking in the vision? Because there's probably 1,000 things that you could build, right?
There are 1,000 things we could build. Probably by adoption. So what's going to get adoption the fastest, and then what's going to have the biggest economic impact?
So like what will get them to like buy more, or to give them more fees to you?
Exactly, both.
And like, are there spaces where you can get even more fees?
Yeah, alternative assets, option strategies. I could go on and on for it.
Which are things that they're already paying higher fees for in other places?
And we can bring in a lower fee than what they're paying in other places, but it's a higher fee than our current product.
I see. So they're mostly like doing market expansion and like making the funnel run faster.
And increase of wallet share.
Wow, I see. Man, I feel like I've asked everything, man, honestly.
Yeah.
Like, I've learned still a lot of the business, so I'm really happy.
Yeah, thank you so much for having me.
Thank you so much for coming, man. Tamo junto, GigaCast. Segue, curte, bora!